The Hedgeless Horseman here, it's September 26th, 2022. Very interesting day in the markets. Pretty much panic selling across the board. Dollar ripped 1%. And there were a bunch of headlines out, negative news around the world. Saw some tweets about big bank CDSs being priced at the same level or around the same level where it was priced just before the Lehman collapse. I mean, the interesting thing right now is like, and that was also, I think I saw investment grade bonds in the US were trading like, same levels as bottom of 2020 during the flash crash, I think, or even perhaps before that, back to 2007-08. And Europe is obviously even worse, pretty much. So it's like we have pretty much the whole world right now is imploding at the same time. You have the US, you have Great Britain, the pound got pounded today. You have Europe and China. There's been some very negative headlines out of China, especially from the real estate sector. So basically, like someone cheekingly said in a post or a comment to one of these headlines, like, "Oh, it's just 2008, but global, no worries." So I mean, this is really interesting in the sense that this is beyond, I think, what any gold bull would like dream about, or not the negative outcomes for the world, but what kind of a scenario are you buying gold for? Right now we have the whole world imploding at the same time. Basically, we're at the let's say before a Lehman moment, but it's not just in the US. It's pretty much Europe, Great Britain, China, and the US. So it appears that it's like much, much worse, especially, or at least right now, because the dollar is killing everything else, and the rates are still going higher. I mean, it's just been going up all day. So I mean, I've never seen this kind of scenario before. At the same time, it's like you couldn't ask for a better environment. Like, when would you want to own gold? Probably when the whole world is literally imploding before our eyes. And still, which I kind of find it interesting, it's like, there's panic selling in everything. Everyone is in panic mode across every asset class, pretty much. And there's a flight to dollars, which pushes gold and silver down, and most commodities actually. But when you really think about it, it's like, I mean, first of all, this is not physical gold and silver. This is the stuff that hedge funds and funds overall, etc. That's what they play around with. That's supposed to be a hedge, or I mean, it's called gold and silver. In reality, it's not physical gold or silver. It doesn't have the same characteristics, obviously, because if everybody on COMEX or in the futures actually wanted gold, it's like 1 in 20 or 1 in 30 would actually get any gold. So it's completely different to actual having physical gold in your hand. But this is what sets the price, obviously, because you've probably shown this before. Gold and silver demand appears to be way up. I think APMEX, which is I think a big US retailer or something, had the best weekend of silver sales in quite some time. I mean, that's just one anecdote, obviously. But the COMEX is being drained. I think it's down to 44 million ounces in the registered category. It was 70 just a few months ago. So it's like, you can imagine at that rate how quickly the COMEX could run out. I think it suggests that the paper price of silver is simply too low to balance supply and demand. There's more demand at this price here than supply. So, people are taking silver out of the vaults. That's obviously a good thing. I mean, that's kind of what you would expect, I think, given the circumstances out there. It's just that it's not showing up, it's not reflecting in the actual gold and silver paper prices really, because that's, completely different buyers and sellers. That's like, where hedge funds play, etc. They don't actually buy the physical gold, they buy something that's called gold and supposed to, well, be an avatar of gold. Anyway, I just find it interesting that right now, for example, gold and silver bugs have a hard time sticking in there, because there's liquidations across the board, even though it's like when you actually look at the news out there, it's like Armageddon. It's like Armageddon on a global scale. I can't even come up with another asset I would rather own. I mean, if you have Credit Suisse, for example, trading at all-time lows with heavy volume, and I think that's the bank with the credit default swaps pricing in, a near Lehman moment. I mean, what would you rather own? Would you rather have euros? I mean, dollars right now, sure, I mean, I can buy that, but else than that, I cannot come up with. I mean, even if you were scared to death, let's say, if you're a gold and silver bug because the future prices are going down, what would you rather want to buy right now? What would you rather want to own when the credit, when the default risk for, across the board global is skyrocketing? That's why it's so fascinating. Because you couldn't, again, dream of a scenario where you would rather own gold, but still, because of the future selling, etc., and the liquidations and people selling probably gold to meet margin calls because they have margin calls in stocks and bonds and, crypto, etc. So they're selling gold. There's a scramble for cash, and that makes people doubt the validity of the physical stuff. But if you look at the physical stuff in any other currency than the US, it's pretty much at all-time highs. So physical gold is doing exactly what it's supposed to do, except kinda in US dollars. And unfortunately, US dollar is what sets the world price. But that's where we are, and of course, I mean, nothing lasts forever. Because, I mean, now everybody's ranting about the dollar. Yeah. The dollar's been going up for months. It's probably much closer to a top than a bottom. And gold, obviously. I mean, this chart, obviously, this chart looks like this. I mean, it's like you painted the same pattern almost. But in my estimation, I mean, just on impulse, I would more describe it like this. Why? I mean, what's happening right now? We have global financial crisis, and we have a ramping dollar. The purple line is the dollar. This is when, during the global financial crisis, you can see what happened to gold. The dollar. Straight up in the scramble for cash. And you can see here, gold went in the complete opposite direction. So it was flushed when the scramble for cash and margin calls, yada yada. After this dollar had topped, after gold had stopped being liquidated, and we're gonna look at that later, but the juniors got absolutely flushed, like they are now. What happened after the dollar topped and gold had stopped crashing, paper gold? The best bull market, I think, in decades. From 2008, late 2008 to 2011. A relentless rise. I don't know how much gold actually went up. 175%. 175%. That would, if you take today's gold price, that would be way over 3,000. Would be over $4,000 actually. After the dollar topped. And what are we seeing now? A ramping dollar in a credit crisis or a global financial crisis, and a flush in gold. Here we actually had I mean, if you take this for example, I mean that this started cracking when sure, I mean dollars was up a bit, but it wasn't even higher than here. Now the dollar is up here, way past any other level, including these ones. So I mean, when we were in the same territory before, dollar was actually going down, and short had been going up a bit, but not vertical like it had in 2008, 2009. So even though this looks very similar, it's like I don't think they share many similarities. Because we know what happened after this crash. You had this thing, but the sentiment is already flushed out. This came off very high sentiment. This came after a big bull in miners and you know, gold and silver. Silver hit $50. Silver didn't hit $50 around here. Sentiment in gold wasn't like, you know, I would say that sentiment in gold was actually like better here than here. Well, maybe not here, but it's like way better than here at least. And the juniors have kind of better sentiment back here than here. I mean, juniors right now, they're trading like what they were trading back when gold was down here. It's a woo-woo world. It's completely surreal, actually. So I mean, that's why I keep saying and have said. Like, I mean, if you think buying juniors now is hard, sure, it's a global financial crisis and the share prices are getting slammed because panic sellers, liquidations, and margin calls, etc. But they are way cheaper now than back here during this bottom. This was the greatest bear bottom, or the greatest bear market, I think. So I think this also more reminds of this period because there's liquidation selling. This wasn't really liquidation selling or margin calls, etc. It had already been trending down for quite a while. And there wasn't a global financial crisis. This is when the Fed raised rates for the first time since 2007 or something. That's when gold bottomed, actually. So it looks nothing like today, you know, comparably speaking. So I don't pay too much attention to this. You know, I don't know where gold is going in the short term. I never do. It's like I don't think we're in for this. I think we're more in this kind of scenario, because obviously it's like everybody's focusing on the dollar. But again, it's like, what happens when the dollar topped? That's what has sparked like every great bull market in gold. And we know the dollar is going to top one day. And they're already pricing in. The juniors are pricing in like the dollar will go up forever. I mean, valuation wise. So if it's pricing in like the trend is going to continue forever, and you know it's not going to continue forever, and you know what happens when it turns, how good is the risk reward? It's pricing in a future that's not going to happen. And it's the opposite of what is likely going to happen after the dollar's topped. I think it's extraordinary. Obviously, it's very hard to do. It's like, let's look at our favorite sentiment proxy, Bear Creek Mining. I mean, this was a pretty nasty bottom, 2-year downtrend, and what is it? Bear Creek bottomed here. Then it went up. Then an even worse crash, the COVID flash crash. And these levels were low for miners. Now it has set a new 19-year low. It has surpassed the global financial crisis bottom. It recently surpassed the worst bear market bottom. And I don't know what's going to happen after this, but it's like, it can get worse, but this is literally, it's like about as worse as it gets in this cyclical sector. The sentiment is, I don't remember exactly how it felt buying this low, but I can't imagine it. I don't think it was much, better than here. This, I mean, if you see here, like this is late 2008, 2016, 2020. So like, 6 years. I mean, these kinds of bottoms, they happen every, 6 to 8 years, let's say. because this market is cyclical. It will always go up and down, up and down, up and down. And believe me, the gold sector is not going away. There was a golden mining sector all through World War II, the Cold War, the crash of '87 to the crash of 2000, the crash of 2008-9. Whatever happens, the mining sector will not go away, because that would mean that civilization is going away. And then it doesn't even matter. And civilization is not going away, so we know that the mining sector is not going away. But it's right now, it's starting to price in a world where actually, poof, the mining sector goes away. And, everything stops. Literally, the fall of everything, beyond the fall of Rome. It's like, yeah, I don't think that's going to happen. Haven't happened yet. The world hasn't ended. But what do I see today? It's like I've been posting a lot on Twitter today. Obviously this isn't fun to see, panic selling just keeps on going. That's obviously what happens every time. I mean, look at this flush here. This is straight down. Literally straight down. This was more of a grind. This was straight down. This was kind of straight down, and now it's straight down again. So this is like panic selling, capitulation, margin calls, etc., etc. And everybody says, wait for the trend to turn. You're losing a lot of money now because you're doing something wrong. You shouldn't be minus 50%. That's how you lose money. If you just waited for the trend to change, that's how you solve it, because in theory you'll never have a down day in your life or a down month. To me, that's just bullshit. I mean, everybody who says that, they can't put it into practice, and I don't think they make too much money actually. I mean, when you think about it, it's like if we look at Bear Creek here, for example. This level up to this is 120%. Can you see how early you could be and still make good returns? I mean, literally, since 2005, 17 years, if you started buying, it really doesn't really matter when you started buying, but let's say you started buying here, this blue here. That buy would have a good profit within not the too distant future, and this is an eternity for most speculators, because like right now, for example, everybody's trying to time the day-to-day movements even. But if you started buying it, this blue line, even if you started here and it went down 66%. You will still be in a 600% profit if you just held on, didn't sell the lows, just sucked it up and sat through the pain. Same here. Down 70%, you would still have a 132% return. If you bought here, you would be down to minus almost 50, still be up at 80 within 1.5 years. You would be up to 144. After that, this crash, if you start buying here, down 56%, and then ended up 146. So what I'm trying to show here is that this idea, I mean, if you just did that, and the point is also, it's like, how do you get better results than this? Let's say you start buying down here. Let's say you start buying blue. I mean, you're obviously, it's like, if you started buying here, for example, and only here and lower, that's 2013. So you were 3 years early. It wouldn't have mattered. It wouldn't have mattered. Your returns, well, first of all, you would have a 200% return within less than 2 years, let's say 1 year. And if you miss that, you would get another shot here, 125% in, let's say 3 years. That is a really good return. Not a lot of people can compound 125% 27 returns in 3 years, even though it sounds like that to everyone, because everybody has all the answers and giving you free investing advice, even though I'm pretty sure they haven't been in the market very long, or if they have, I don't think the returns are that good. But people can't help themselves. They share and say stuff that justifies they're doing something, and they want to make other people do it. I mean, again, one could say that I'm doing the same, except that I think my like I've shown countless times, this actually makes sense. But again, let's say you started buying every time Bear Creek hit this blue level here or lower, and you can look it up yourselves. You would be in a profit at least 100% within 2-3 years. I know that doesn't sound good. That's not the point. It is good. That's the point. It is good. People don't compound like that typically. Okay, how on earth do you jack that up even more? I mean, if we can take that to the bank, that buying here is by definition profitable if you start buying here, regardless if you went down 67% or 70% or 50% or 44%. By definition, it still was a good buy, as long as you held it to the next sentiment top. Okay, we agree on that. Okay, good. How do you jack up these returns even more? So if it's not a mistake to start buying here, then it per definition obviously becomes an even better buy the lower from that point you buy. You can see the numbers up here. Every additional, if this was a good buy, every additional buy here lower was an even better buy, exponentially better buy. This was a 266% or 260. This was 657. So just knowing that if you're even, obviously you don't even need to be close to a bottom. You don't need to be close to a bottom and it still works out. I mean, if you start buying here, you would have 184% return, 2015. So there's like 1 year of, terrible action. So you had to suck up 1 year of 62% down. But then you would have, 188% profit. And obviously, again, the longer this takes, the closer we are. This is the bottom. And we know every market turns. So every goddamn buy you do lower and later gets better and better, not just from the future profits you're gonna make, but also from the time to set future profits. Shorter time for a even better return. Gets better and better and better and better and better and better all the way down. You would beat everyone if you just did that. You would literally beat 99% in this sector if you just did that with like Bear Creek mining. No, almost nobody beats the market even. So it's like, but what am I seeing out there right now? Makes my brain hurt. I don't know how many comments I've seen today about it's risky now. You shouldn't buy here. You shouldn't buy here. Wait for the trend to change. Oh, it can go lower. You don't know what's gonna happen. It can go lower. Be safe. People have lost money, so it's dumb to buy more. Explain that in a cyclical sector. Explain that. You can't. They are rationalizing their emotions. That's what they do. And they want you to do the same because they don't have the balls or stomach or being objective enough, etc., to actually ever buy a low. I mean, you can see who has a shot at actually beating a cyclical sector. The people who right now are shouting about the risks and it can go lower and wait for the trend to be up. They have never bought a low in a sector in their entire life. I bought this, I bought this, I bought this, I'm buying this. I don't care. Like I've showed, it doesn't matter if the next sentiment high is a year or 2 or 3 years away. You could have started buying up here, and that would, most likely, if Bear Creek, I mean, this is just a proxy, but if Bear Creek is still around, we're going to get to this level again. And every buy below this would be increasingly profitable in, let's say, 2 years. When we get, I mean, forget about what we're doing down here. It's like what's going to happen in 1-2 years. Where are the miners going to trade in 2 years? The world might have imploded by then, and we might be on a gold standard, or at least the currencies are gone. What do you think gold is going to be worth in purchasing power? This is, I mean, to just look at tomorrow or next week, I mean, losers do that. There's no point. Everybody does that. Everybody's screaming about the dollar right now. Everybody can see with their eyes that juniors are going down. But no trend lasts forever. But I mean, if the amount of people at these bottoms that shout that you should stay away, it's like goes up exponentially. Do you think anybody talked about risks up here? No, I barely saw anyone talk about risks or valuation risk. That, hey, we're overpaying for this stuff. I mean, First Majestic here, it was pricing in like, I don't know, $35 silver. I think silver was at 28. I sold First Majestic, after I sold First Majestic, because I already thought it was getting pricey, overvalued. It went up 200-300% more. That's how crazy the market is. This sector can be absolutely ridiculous to the upside and absolutely ridiculous to the downside. The thing is, they never stay there. The bigger the rally, the higher the overvaluation, the bigger the crash afterwards. The bigger the crash, the bigger the undervaluation, the higher the rally afterwards. That's how these markets work. So if you're selling down here, I mean, sorry to say, but I think you're a bloody idiot. You cannot rationalize it anyway. You can't look at valuations. They're not cheap. Or they're not expensive. They're incredibly cheap, like Rick Rule. Cheapest, he has seen them in 39 goddamn years. So you can't say that you're buying something that's overvalued, because it's like 99% sure that whatever you're buying right now is probably undervalued, unless it's like one of these crappy juniors. And you can't, from a contrarian perspective, you can certainly not say that. Because this is the most atrocious sentiment, I've seen since 2015-16. Or global financial crisis. Okay, so you're certainly not a contrarian if you're selling here, okay? Just the cyclicality overall. The fact that the commodity sectors, and I've showed, I don't know how many, I showed lithium, I showed uranium, I showed potash, I showed oil. A bunch of juniors actually went down up to 95%. Then they went up like 1,000 to 3,000%. That's how these markets work. Especially the cyclical sectors like miners. That's all forget anything else except that these markets are cyclical. And right now, again, everybody's talking about the risks, and that is, what people are saying is that I won't buy this because this has happened already. Who cares? I mean, if it's happened, it's past anyway, and it's gonna go to wherever zero is. That's not gonna happen. The mining sector will not go away. Gold and silver, physical gold and silver, is going up in demand right now. The world is getting worse. This is a liquidation, panic selling, margin calls. And we're going into tax loss selling season. That's all there is. There's a million reasons why people justify selling here. Same here, same here. There will not be a shortage of people screaming sell here or sell here. But there's no shortage of people who absolutely can't, have a shot at beating the market. And like I said a million times before, I can afford to buy high because I'm buying every month pretty much. Almost every week if I can. I can afford to buy up here and here and here and here because I never sell low. I buy low. I increasingly buy low. So again, if I just buy all the way down, my future returns to my portfolio is going up. Where do you think this is going to go? Do you think it's going to this sector or any other sector is going to look at how short time Bear Creek, for example, stayed at these levels. Here it's like touched, retouched, and wham. Here touched, wham, straight up. And now we're going straight down. So I wouldn't be surprised if we bottom in this tax loss selling season and we're back up here in, second half of next year. Imagine how much money you're gonna make, because we know the mining sector is not going away. The dollar will one day top, and when the dollar tops, typically that has sparked some of the biggest bull rallies ever. So forget about timing this crap. And again, it's like when people say, "Yeah, I'm gonna wait, for the trend to change." I mean, what they're saying is no. I mean, literally, it's the same as no. I refuse to buy a company at PE2 when it's like ridiculously cheap. There's almost no way you're not going to make money. No, I'm going to wait till it trades at PE7 because by that time it has gotten more expensive, which means that the trend has been up. So this. I won't buy this, but I'll definitely buy this when I have a trend. I mean, what people? I mean, that's just pussy investing, basically. I can't, if you can't suck up a fat decline. I mean, like Charlie Munger said, if you can stomach a 50% loss in your portfolio or your stocks, you deserve the mediocre returns you get. Because if you buy back here and refuse to buy here, that's already almost 110%. So if he gets in here, sure, he'll get 266. If you bought here, you will get 675. So obviously, the more you buy down here, the higher your average future returns are going to be. And even if you can up your portfolio with 3% in these areas. I mean, that's still meaningful. I mean, let's say you had 3%, you added 3% down here. That's like 2,000%. 2,000%. That one buy is almost gonna make back your entire your entire portfolio loss if you bought here. I mean, you could literally have ticked the top here. You went all in here. Went down 93%. You added 3% to your portfolio, and your portfolio is gonna be in the green here, even if you top ticked your first buying. Obviously, again, the better is to just buy all the way down, because, like I say, I cannot afford to miss opportunities like this. Because I have no idea what the market is going to do. I mean, think of it, like all the people saying that I'm going to time the market, yada yada. Okay, so who was to say that this wouldn't turn into this? How did you know that this would be the bottom? If you're like, every one of these people who say they're going to bottom tick the market, for example, it's impossible to know. I mean, take this, okay, ticked, went straight up. Why wasn't that the bottom? And this, if you waited for the actual, to have an even better trend, well, then you would have bought this. Probably, because, took out higher highs, higher low, higher high. And you would get absolutely massacred because that quickly turned around. And would you sell then? Okay, let's say you sold here at a loss. And this time you're not going to be so stupid like last time. Okay, let's say when is the trend changed here? Because I mean, this movement This kind of, it doesn't even look as impressive as this. I mean, it's still not a really higher high. Well, maybe this was actually. But at the same time, then, uh, why wasn't this move here, this kind of move, that it went straight up there? No, it topped here. We had a flash crash, and it went to an even lower low. And if I understand correctly, there was a bunch of, I think some newsletter recommended selling, miners here. It's like fair to them if they're, technically traders, let's say. I mean, it was a lower low. But to me, this was such an, obvious buy. I mean, gold was up here, juniors, miners got slammed. So it's like, that's the thing. It's like a lot of the stuff you read out there, and people actually believe them, even especially if they say it themselves. They literally believe that they can time or trade this market. They literally believe that they can. Why wasn't this a bottom? I mean, this kind of looked exactly like this, and that went even higher, but this didn't. Why was this the bottom? Why didn't it go down like this? Do you see where I'm getting with this? It's like impossible. How do you know that this was a fake rally? How did you know that this wasn't going to go lower? Now everybody down here is going to think that it's going to go lower like this. It didn't, okay? They missed out. This got people to sell, then it went straight up. What can be easier than just knowing the fact that in the case of Bear Creek, for example, if you just started buying below this blue line, for example, any buy lower than that was, gonna be even more profitable. So how on earth can people get them? I mean, again, who cares if we go down here? It's not gonna stay down there. It might be up 400% within a year after that. So it's like people kid themselves that the reason why they don't make any money really in investing or in this sector in particular is because they should have waited for the trend to be up. They shouldn't catch falling knives. They're gonna know when the bottom is in. Absolutely horseshit. Obviously, so you could be wrong by a wide margin. You could have started buying here, and just that. The only better option than selling or whatever is like just buying even more. The lower this short has gone, the better every buy has been. If you fast forward like 1 year, every time. And again, I'm not saying Bear Creek, but this is a proxy for juniors overall. So it's like people tell themselves that the reason they don't beat the market is because they are around for, let's say, they stuck around for this movement. This is when they say, I shouldn't been in this sector, I made a terrible mistake. No, the terrible mistake you did is you always sell here when you should be buying. And the reason why you can never afford a flush out is because you started buying up here in the first place. So you have to break that cycle. It's like someone said today, well, it's not fun if you have bought a $1 stock and it's now down to 25 cents. No, of course it's not fun. How do you fix that? By start buying when it's 25 cents instead. So that's also, it's like almost kind of fun. It's like they sell out because they sell now because the stock that they bought at $1 went to 25 cents. And the lesson they learn is like, really don't buy minors or juniors because they can go from 10 to 25. Now the lesson you should learn is that you should buy them before they hit $1. Like at these points in times. So it's like it's like they don't understand it, but they should understand what's, keeping them from beating the market. It's this constant thing of always buying high and never buying low. They buy high, sell low, sell out, go into another sector that is hot, buy there high, then that tips over. It's like lithium now. I mean, it's hot as hell, that market. Are we closer to a bottom or a top? I mean, it doesn't take a brain surgeon to realize that. It's like if I was going, balls deep into the US dollar right now. How is that not chasing a trend that has already been ongoing for, many months by now? That is exactly what that is. So people kid themselves. They say they're investors. They say, oh, I've heard about buying low and selling high, but when the low actually comes, they make the wrong, or they learn the wrong things. They learn that they shouldn't be in this asset class, even though this is like, I mean, if you think about it, it's like the mining sector is probably one of the easiest sectors to beat, kinda. Because these markets become totally extreme, and you only need, if you're part of one of these bottoms, that's like 600%. It's like 2,000%. I mean, you could basically retire, for the next 10 years, and the market wouldn't catch up to you if you just, if you just are a part in one of these extremes here. And again, I don't know if we're gonna turn here or whatever. Does it really matter? No. Because they're so cheap already, they're just going to be even cheaper, and they're going to go way up when this turns. That's how the markets work. That is all you need to know really about a sentiment-driven and cyclical market. They go way up and they go way down. Then they go way up again, then they go way down again. They rip and crash and rip and crash and rip and crash and rip and crash. Now with a crash, what do you think you should do? Or you can listen to everyone else who says, yeah, I'm going to buy when the trend is, my friend, whenever that is, possibly here. If it's broken this trend, like, I'm going to buy here. Oh, okay, oh, goddamn, okay, stop loss. Okay, higher high, oh, I'm buying here, stop loss. Oh, I'm going to sell here because it can go even lower. Oh, Jesus, it ran up. So I'm buying back here, oh, stop loss. I mean, you can just play all these scenarios through, and you should realize that almost nobody is gonna time this. the only offense, the best defense and the best offense that I know is just increasingly buy as cheap as possible. The lower it goes, don't even think about it. Throw more money, obviously high quality juniors, etc. Preferably with a lot of cash. But it's like this market is not a pricing mechanism right now. It's a voting machine. It's a panic machine. There's nobody selling down here because they ran the calculations and decided that, I think juniors are expensive and they're not going to go up. No, everybody is in panic mode, and when the last panic seller has sold, we're going to go up again. And right here, it's like when the last greedy trend follower has bought, there's nobody else to buy. All the dumb money is already in, so we go down. And now soon the dumb money will be all out, and then we're gonna go up. And the ones who get this, the ones who get this simple reality that the best offense and the best defense you can possibly have is just buying cheap, they're gonna make a lot of money. And again, I can afford to buy high, because I am always, since 2015, I am 100% long from the bottom tick. My entire portfolio went up, not as much as Bear Creek, 500%, because I was fully deployed here and I bought all the way down. I was in from the bottom tick here because I never sold. I was in from the bottom tick here because I never sold. I was in from the top tick to the bottom tick here because I never sold, and I'm just, buying more. And since I pick at least above trading sardine type companies, the highs are higher, the lows are higher typically as well. That's as simple as it gets. I don't need technical analysis or whatever. I just know how people work. I at least figured out how a cyclical sector works. I was gonna do some more slides, but I think this has gone long in the tooth. It's like, let's say a trick. For example, how do you get yourself not to go insane? It's like, remember this, that They rip, crash, rip, crash, rip, crash, rip, crash. That's all you need to remember, really. Now we're in one of the worst crashes ever. So it's going to rip out of these levels one day. But at the same time, remember, we're going into tax loss selling, and there's a lot of people scared right now, and the world is getting worse and worse. So people will have more negative emotions, and some will have tax incentives to sell, which will create even more negative emotions. And now nobody's selling because of anything else than emotions. They're literally projecting. They're buying because they fear that someone else is going to sell their stock tomorrow, so they better get out now. I mean, that's what happens all the time. When the evidence of it can only go down, being at max, they are so convinced that this will continue forever. And that's what people say now. This will continue forever. That's why you shouldn't get into this sector. And that's what they said when it bottomed here, because people sold all the way down because they expected this. And here they expected it to go like this. It never does. It never does. Maybe this stock, but the mining sector is not going away. We're going to have a bottom one of these days. It's going to be a fat bottom. And I'm going to be fully deployed, so I cannot afford to miss these rips. Because the rips happen in typically a shorter period of time than the way down. This was like, very, very quick rally. Other tricks, let me think. I just forgot. Now I'm trying to, this is, if you remember that sectors, especially, the markets are cyclical, especially commodity sectors, they're super cyclical. You don't even need to be in close to the bottom to make a lot of money. Obviously, you could have started buying here and you would be up quite a bit. Could have started buying here, bought all the way down, great. Bought all the way down, great. Bought all the way down, great. And I think if you buy all the way down, that's great as well. Because again, this is okay, remember again that the worse the sentiment is, the more negative feelings, and it's the feelings right now, negative feelings, that get people to sell, not because really I think, most juniors should probably be, I don't know, up here at least, but they're down here. Okay, anyway. So, if you understand this, how humans work, you should not, let's not, visualize that, understand that this and this can't go on forever, but it can still go on for a time. So you should be aware of the fact that this might go, who knows, 30% down, 40% down. Be aware that could happen, and remind yourself of these, shorts like these from different commodity juniors. And remind yourself about the fact that, okay, the longer it has gone down, the closer we are to the next uptrend. The lower they have gone, the higher the returns. When you think like that, you already realize what you should do. That, okay, if you bought here and it went down here, this was a hugely profitable buy. This was a hugely profitable buy. This too. So you already know kind of that you're tied to the math, because the future expected returns are so outrageous already. Now it's just a degree of how outrageous they can be. And if we're lucky here, there might be some select few stocks that literally go down 50% more. Probably some of them are gonna, do 1000% in the next 3 years, I think. So if you already know that it's like, the later I sell, the worse. The lower I sell, the worse. And let's say it keeps going down tomorrow and the day after and the day after. If you already know that you have not made a mistake, and believe me, there's nobody on earth that is gonna bottom ticket. If you're even close, if you're first of all have the stomach to buy, and you're even close to a bottom, even if you're off for like 1-2 years and you just keep on buying, you're gonna beat everyone. You're gonna beat everyone. You're gonna beat every market timer. You're gonna beat every trader. You're gonna beat everyone that's waiting for the trend to obviously change or yada yada yada. That's like you're gonna do it. It's not sexy because it requires that. I mean, in my case, I have huge drawdowns. But over the long term, my portfolio is going like this. Because I never mess up a bottom. Never mess up a bottom. That's the main focus. That's also one lesson. Okay, what's costlier than buying a top, selling a bottom? Literally. There's nothing more expensive than buying a bottom or a low that goes lower or lower still, because that's later and higher returns. So right now, mistakes, the things we make now, I mean, I, for example, think that if you're not buying here, you're probably not going to buy here either. So you can forget that the ones that are not buying here are not going to buy down here or here either. They're going to be the ones that buy, here, for example, or here, for example. Pretty much, I think that's typically the case. They're making huge mistakes, in my opinion. Huge mistakes, because I don't think they kid themselves that they are gonna get into this sector, because when they really deploy in this sector again, I think from the bottom probably be up. I mean, they might dabble in it if it goes back up here, whatever, but again, there's no guarantee that won't be a fake rally like this. So if they buy here, they are forced to sell here, so they take a permanent loss, and then they try it again. Maybe that rally is kind of fake, or it retraces more than they thought, and they take a loss because they're not sure that this was actually the bottom. So that's how you obliterate your portfolio. A lot of stupid decisions, typically market timing, etc. I just buy because I understand that the longer this takes, the lower it goes, the costlier it is to sell, the more profitable it is to buy. That's all I focus on. I cannot afford to miss out on these bottoms. I cannot afford that at all. It's people who really can't afford it are the ones that bought here and now are thinking of selling. You're never gonna beat the market that way. Never ever gonna beat the market if you just buy high all the time and refuse to sell low. You have to break the cycle. You have to break the cycle. You have to ignore you gotta ignore all the fear porn out there who says that this trend will never change, the dollar will never top, the miners are going away, yada yada yada. And again, I have no idea where gold or the miners are going. I just know this simple fact that there is no mistake that is more costly than to sell low and late. Low and late is the worst ever. I mean, obviously it's like this. You could have bought here and here. This was an even better buy because that was later and closer to the uptrend. You could have bought here or here. This was better because, well, in this case, bottom was actually in already, closer to the uptrend. But you don't know that because then this came and actually cut below both these. So again, the only weapon I think I really have is just relentless buying as low as I can. And if I up my portfolio by 3% down here, it might not look much. I mean, if you're down 60% and you're adding a 3%, might not look much. But that really adds up in the long run if you add 3% at bottoms, etc. That's it from me. Again, it's like be cool, calm, collected. Do whatever feels right to you. I know that a lot of people don't agree with me, and it's kind of supposed to be that way because 95%, I don't think they really have it to beat this market. So this is probably not going to make sense. But to me, everything I said in this video makes perfect sense. And one way to see it is it's so simple, but it's so hard to do in practice because 95% will disagree with you. 95% will scream buy up here, sell down here. and talk about the risks being high here, but not here. No, when the trend is your friend, even though PE 30 or whatever, that's apparently not risky, but buying like P 3 or 2 down here, that's supposed to be risky because the trend is not your friend. And then they can never figure out why don't I make any money? I always buy when the trend is my friend. Oh yeah. Anyway, thanks for listening. This is not investing advice. Don't invest money you cannot afford to lose, because again, we don't know how long this will take. Typically, when we reach these extremes within a month or two, that's typically it for the flush. But given how bad it is out there, maybe there will be an extended liquidation period or margin call or less money overall going into the sector. That's something to keep in mind. It's just that when it turns, if it's lower, it's just going to be an even crazier rally afterwards. That's all I know. Thanks for listening. Bye.